updated and seek the counsel of professionals whenever it is required. The taxation of cryptocurrency is discussed in Section 2. The taxes of cryptocurrencies might vary depending on a number of circumstances, including your place of residence and the sort of cryptocurrency activity. Now that we understand why cryptocurrency taxation is crucial, let's investigate how cryptocurrencies are taxed. Tax on capital gains. Most countries treat cryptocurrencies as assets, which means that they are subject to capital gains tax. This tax is applied when you sell or exchange your cryptocurrency for a profit. When it comes to the Internal Revenue Service's tax code, if you receive cryptocurrencies as payment for goods or services, it is considered taxable income. The value of the received crypto at the time of receipt is used to calculate the tax. Mining and staking. Crypto mining and staking activities generate income, which is subject to taxation. The tax implications vary depending on your jurisdiction. Mining and staking. Crypto mining and staking activities generate income. The taxation of cryptocurrencies is a complicated and rapidly developing field of both finance and tax law. It is vital to keep in mind that tax policies are subject to change over time, and that the manner in which cryptocurrencies are taxed might differ dramatically from one nation to the next. As a means of providing a more comprehensive picture, I will explain on the manner in which cryptocurrency is normally taxed in numerous nations as of the most recent time I updated my information, which was in September 2021. Please bear in mind that if you want information that is the most accurate and up-to-date possible, you should always consult with a tax professional or the most recent tax guidelines. The taxation of cryptocurrencies as capital assets is one of the most prevalent and widespread approaches to taxation of this asset class. When you purchase and trade cryptocurrencies, you expose yourself to the possibility of making or losing capital. The classification of these gains or losses for tax purposes is determined by the amount of time that passes between the purchase and the sale of the coin. Short-term capital gains. If you hold a cryptocurrency for less than a year before selling or trading it, any profit is often classified as a short-term capital gain and taxed at your regular income tax rate. This applies even if you sell or trade a cryptocurrency after holding it for more than a year. Long-term capital gains. If you keep a cryptocurrency for more than a year before selling it or trading it, any profit is typically considered to be a long-term capital gain. This is the case even if the cryptocurrency is traded. Long-term profits are taxed at a rate that is often lower than that of short-term gains in many jurisdictions. Depending on the circumstances, cryptocurrencies that are mined or staked, as well as cryptocurrencies that are received as payment for products or services, could be deemed taxable income. The value of the cryptocurrency that was received is normally determined by its value on the open market at the time that the coin was received. Taxes on gifts and inheritance. If you give Bitcoin as a present or inherit it, there may be tax repercussions for you. These types of transactions may result in the imposition of a capital gains tax in some countries. Mining and staking rewards. Cryptocurrency miners and stakers are typically required to treat the rewards they earn from mining and staking as taxable income when filing their tax returns. In most cases, the value of the awards is determined by the price of the market at the time that they are received. Liability on a global scale. If you engage in Bitcoin transactions that span international borders, you may be subject to additional tax concerns. These may include double taxation agreements and obligations for reporting in various nations. Tax loss harvesting. In the same way that you can offset capital gains with traditional assets, you can potentially lower your overall tax obligation by selling cryptocurrencies deliberately at a loss. This strategy is known as tax loss harvesting. Regulatory shifts as governments and tax agencies work to accommodate the ever-evolving nature of cryptocurrencies. Cryptocurrency tax regulations are likely to undergo shifts in the near future. It is absolutely necessary to keep up to date on any new tax legislation or recommendations that may have an effect on your tax responsibilities. Consultation with a tax professional because of the difficulties involved in the taxation of cryptocurrencies. It is recommended to speak with a tax professional or accountant who is knowledgeable in cryptocurrency. They can assist in ensuring compliance with tax regulations and in optimizing your financial status from the value of the awards is determined by the price of the market at the time that they are received. Liability on a global scale. If you engage in Bitcoin transactions that span international borders, you may be subject to additional tax concerns. These may include double taxation agreements and obligations for reporting in various nations. Tax loss harvesting. In the same way that you can offset some countries' traditional mining and staking rewards cryptocurrency miners
miners and stakers are typically required to treat the rewards they earn from mining and staking as taxable income when filing their tax returns. In most cases, the value of the awards is determined by the price of the market at the time that they are received. Liability on a global scale. If you engage in Bitcoin transactions that span international business, you may be subject to additional tax concerns. These may include double taxation agreements and obligations for reporting in various nations.
Understanding how cryptocurrency is taxed is
Tax
vital for all
profession
cryptocurrency
tax laws in the same way that you can tax in some countries. Mining and staking rewards. Cryptocurrency miners and stakers are typically required to treat the rewards they earn from mining and selling their tax returns. The awards is determined by the price of the market at the time that they are received. Liability on a global scale. If you engage in Bitcoin transactions that span international business, you may be subject to additional tax concerns. These may include double taxation agreements and obligations for reporting in various nations.
To begin, you should conduct research on and get to
Tax
know
profession tax laws in the same way that you can tax in some countries. Mining and staking rewards. Cryptocurrency miners and stakers are typically required to treat the rewards they earn from mining.
dates, amounts, transaction IDs, and counterparties involved in each transaction. When it comes to calculating gains, losses, and potential tax obligations, this information will be absolutely necessary. Utilize cryptographic accounting software. Give some thought to the possibility of making use of specific cryptocurrency tax software or tools in order to automate the process of keeping track of transactions and determining tax obligations. These tools have the potential to help simplify the process and cut down on errors.
Your tax returns. The awards is determined by the price of the market. It's determined by the price of the market. Mining and staking rewards. Cryptocurrency miners and stakers are typically required tax concerns. These may include double taxation agreements and obligations for rewards they earn from mining. Understanding cryptocurrency tax profession tax services in the same way that you can tax in some countries. Mining and miners and stakers are typically required to treat the rewards they earn from mining.
Were purchased and priced for transaction IDs, and counterparties or first in first out, or specific identification. You may be able to choose potentially using the first in first out FIFO, accounting method or the particular identification of lots, depending on the laws that govern your country. Unlike specific identification,
Your tax returns. The awards is determined by the price of the market. It's determined by the price of the Understanding the tax profession tax services in the same way that you can tax in some countries. Mining and miners and stakers are typically required to treat the rewards they earn from mining.
as a freelancer who is confident, your first in first out
It's in your tax returns. The awards is determined by the price of the market. It's determined by the price of the tax returns. In the same way that you can tax in some countries. Mining and staking tax
shifts as tax agencies work to accommodate the ever-evolving nature of cryptocurrencies. Cryptocurrency tax regulations are likely to undergo shifts in the near future.